now. Let's do some trading on it. Scott Bauer is joining us, CEO of Prosper Trading Academy. So, Scott, I mean, as Michael points out, I've had to change my tone on this the past year as they become more and more just central to the entertainment space. But still, the move's going like this. And any of these exponential moves right now.
Hyperbolic.
Yeah, a little, you got to be a little bit wary, no?
Worried? I don't know about worried, but as a trader, I want to take advantage of the volatility, and I certainly want to take advantage of all those Benjamin Franklins Michael was talking about. Great analogy there. So, Oliver, what I'm looking at longer term, I could care less. All right, earnings are the 29th. Right now, I am not putting on any trades that would encompass the earnings print. So what I'm doing, I'm looking to next week. They expire next Friday, pre-earning. And what I'm doing is I'm just looking at the volatility right now. And I'm looking what the market maker expected move is in this stock. And I've come up with an iron condor strategy. You know I love these because I love collecting premium that has a slightly bullish bias to it. And this is just, it's a 1 week trade. What I'm doing is selling next week's 220, 215 put spread. And I'm also selling the 245, 250 call spread. I can collect about $2.50 for that. So my break-evens next Friday, again, ahead of earnings, has nothing to do with earnings. My break-evens are 217.50 on the downside and 247.50 on the upside. We stay within that range by next Friday, I make money. We go out of that range, I lose money. I'm capped out. It is a completely risk-defined strategy. And I really like this. Given the volatility, I'm able to collect some excess premium here, and I don't have the earnings risk.
Okay, so you don't have the earnings risk because we do have them coming up on the 4th of November, so you're giving yourself a week ahead of that. Scott, when you use volatility in a name like this, I mean, are you going through the options chain, finding the expiries that have the most vol and going there to do your work basically to extract as much as possible?
So what I do, Oliver, is I look to see what is that market maker expected move that's built in, which is all based on volatility, right? The higher the volatility, the larger that expected move is going to be. And then I use those strikes based on the expected move to come up with the credit that I want to receive. Now, that expected move, like I said, it's a little bit beyond my put spread strike. And that's why this is a bit bullish of a trade. In other words, the put spread strikes that I'm using are a little bit closer to the money than what the expected move really is, but that's okay. I'd rather be a little bit bullish here, conservatively bullish in the short run, and take in a little bit extra credit here. Again, 100% risk defined. If I'm wrong, I'm wrong. I know what I can lose. I really like this, though, based on the volatility.
All right, so right now, there's 3 major legs to this, right? And Scott, what you're saying is as long as you don't get a giant swing, that's kind of what the market's become accustomed to here in ROKU. So you could move higher, you could drop, you could have a pretty significant move. You really have to have a blowout event for this trade to work against you.
Right, and there is a little bit more risk to the downside in terms of that move because of the strikes.
Just staying with the momentum.
But I'm staying with the momentum, yes. But again, it's so important for traders and everybody looking here to understand what that market maker expected move is and how to use that to your advantage.
Okay, all right, appreciate it, Scott. Nice work here with the trade on ROKU now down just 2% as momentum trades stall out a little bit. Appreciate it, Mr. Bauer, CEO of Prosper Trading.